Hello, Walter and I hope that you're doing well. The reason for this quick video message is because we need to alert you to something very important that could potentially save you a lot of money. Firstly, we would like to show you some super geeky market stuff and try our best to explain it to you in layman's terms so that you can make educated decisions for your family. Okay, come take a ride with me on the candlestick chart.
What you are currently looking at is called a candlestick chart. Imagine this as a storybook for the housing market. Each candle represents a period of time, like a day or a week or a month. The body of the candle shows where prices opened and closed in the market during that time. If the body is filled, it means prices closed lower than they opened, which means potential weakness in the market. If it is empty, prices close higher, which shows strength. The wicks or lines above the body show how high and low prices went during that period. Long wicks can indicate price volatility, like if a home's value fluctuates a lot. Shorter wicks might mean more stability. By reading these candlestick stories, we can get insight into whether it's a good time to buy or refinance a home based on how the market is behaving. We want to show you something important that is happening right now, and we want to compare it back to December 13th, which was the last time that the Fed stated that they were going to cut interest rates. Back on this date, you can see that we had the biggest gain, and if you look at today, you can see a similar story based on the candlestick chart. So what happened today? The CPI Consumer Inflation Report came out near expectations, showing that inflation did finally tick lower in April. Meanwhile, the Retail Sales Report and New York Fed Manufacturing Index came out weaker than market expectations. On balance, this is good news for mortgage rates, as it makes it more likely that the Fed will cut interest rates later this year, despite saying that they probably wouldn't.
So what does this mean for you? What this means is that you are most likely going to start getting calls, mail, and emails from loan providers that may not have your best interest at heart, trying to get you to refinance. Here is the big problem with this. In our expert opinion, it is not time to refinance yet, unless you need a significant amount of cash to pay off debts or complete a large project. Every time you refinance, there are closing costs involved, and if you refinance more than once, you have to ask yourself where your break-even point is when it comes to the costs involved in each refinance. Or just give us a call and we will actually do the math with you. You really should only have to do a rate and term refinance once, well, maybe every few years, and rates will be going lower. So right now, in our opinion, it is not time to do it. We want to advise you properly as to when the right time to refinance is. If you have questions or you want to share an advertisement that you received with us, we invite you to please call, text, or email us. We intend to be your mortgage advisors for life, and we want to advise you in a fiduciarily responsible way so that you don't potentially make a refinance mistake that could possibly cost your family thousands in closing costs that you will then have to pay again once rates go even lower. Please give us a call, text, or email at any time if you have questions. We know that you are most likely very excited to refinance, and you've been waiting patiently to do so, but we are advising you to wait until rates drop lower, and we will for sure be letting you know when it is time and hope to earn your business again. We love you and have a great week.